Hello and welcome to the Wendell Effect. My name is Brandon Wendell, and we're going to be going over the energy futures markets for the week of 14th May 2023. Before we get started, just need to remind you that we are not broker-dealers or investment advisors. We're going to take a look at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities, giving personalized recommendations. All markets do have the risk of loss. No matter what you do, you can't eliminate it, and do not trade with money you can't afford to lose. We're also not subject to trading restrictions, so make sure we can have a position in a security or initiate one at any time. You can stay in touch with me by emailing at brandonwendell.cmt@gmail.com. You can also follow us on Twitter or follow me on Twitter at TraderBdub. And you can please hit that like and subscribe button. It helps us out a lot to be able to provide you with these videos on a weekly basis. So, jumping into it for the week of May 14th in the energy markets, looking first at the US dollar, still very bullish. You can see that we had kind of a bounce here where we're making lows above 40 on the daily chart. That's very bullish, and as we see, we broke out last week. So it looks as though we're going to continue to push higher, and we do need to keep an eye out. We ended up obviously breaking down from these areas. I'm trying to remember what that line was from. I think that is just the origin of some selling pressure and may give us a little bit of an opportunity to, if you're looking at the dollar, we would see it stall most likely at that 104.20 area before it even hits that other supply zone. Looking at the 4-hour chart, you can see we are pretty bullish. I didn't mark this one as demand, but I probably should have. We have drop-based rally, and we actually have this rally-based rally around 102 that could provide another bounce if we pull back a little bit. But overall, the markets are looking very bullish, or the dollar's looking bullish, meaning that's going to put some weight on the commodity side and push prices down for commodities. So looking at the weekly chart on crude oil, here we are again testing the demand for the second time. We are actually holding up a little bit. This is a positive divergence where prices made a lower low. We didn't do that on the indicator. That's usually bullish. We failed to break out, and what happened was because we didn't have enough momentum, we didn't get above 60. There was a failure on that gap up and breakout. But now we have a positive divergence. We may do a little bit more of a move back up again. Looking at the daily chart, we're still very bearish. But you see there's a positive divergence. Low, lower low in price, but we didn't make the lower low on the indicator. Now, in order to get a trend reversal to bullish after a positive divergence, you need to put in a low where the RSI doesn't go below 40. Well, obviously that didn't happen. We went below 40. So it looks as though the bearish trend is likely to continue along with, again, that rising US dollar. So my next target to the downside here on the daily is at 65.87. And the bigger move down still hasn't hit its first target of 62.06. That could come, maybe not this week. I think that the 66 area is probably more realistic for a target for this week. But maybe next week we hit the 62. Looking at the 4-hour time frame, it's not going to be a very fast move down right away. You can see we do have a little bit of demand here, 69.11, 67.45. Not the strongest of demand zones. Didn't really cause any kind of breakouts, but that could cause a little bit of a pause in price before we drop. I would love to be able to short on a bounce up to supply, but you got to be careful. The 75.04, if you go back to the daily chart, we would be taking out that high if we were to run up into supply up here. So that would change the trend, and you cannot take a short if the trend is not in your favor, unless you think the trend is going to continue, right? So basically, could we bounce above 74, that previous high, use this supply and short? If the RSI stays below the previous high, yes. If we get a negative divergence, then I would look for that short at 75. If not, then I would just be careful because it could lead to sideways movement in crude oil. Looking at crude oil historically, from the 14th of May to 21st of July, it's actually relatively bearish. Sideways and choppy and somewhat bearish. So that's what I'm kind of expecting, is that sideways choppiness and bearishness. As I said, not the best moves to the downside, probably better for day trading than it is swing trading. Looking at nat gas on the weekly, we tried to rally up. You can see that as we've been moving down, we've been losing our bearish momentum. So are we putting in a floor? Maybe. Well, let's take a look at the daily chart, and you can see a positive divergence is suggesting a bit of a pullback, but all we did was run right back into the 2.5 area, which was the origin of our last drop. So we don't have enough momentum to cut through that area and break above 2.7, but we also don't have really good downward momentum that's going to sell off this week. So I'd expect this to be a little bit bullish, but slightly choppy and sideways. You can see we went running right into that supply, breaking above 60, which should give us enough momentum to continue higher and maybe test the 2.7 area eventually by the end of the week. It's not going to be a very fast run. Again, I'd be more looking at intraday trade opportunities than I would long-term swing, because really when you go to the daily here, we got nothing to look at as far as demand zones to buy or supply zones to sell. And there's too much basing here for a good buying opportunity for demand. You know, all the orders have been depleted, so there's just nothing I can really see as a great opportunity. Even with the shorts, we're not bearish enough to jump in on the short side. I would more look at the intraday opportunities and take it day by day this week. But I expect this to be a bit choppy, but slightly up by the end of the week. Moving on to gasoline, we are near the bottom of the channel, had a false breakout, couldn't get enough momentum to go out. You know, it looks like it's trying again. You see on the weekly chart, last week we had that bearishness after we tried to rally. And it looks like it may continue. We got weekly demand at 2.08, so we just came off this supply, had rally base drop, and we're very bearish, so we're trying to drop. If we're going to go down to the 2.12, we need to break this low and have more bearish momentum below that low on the RSI. If we go below the low from early May and we do not have more momentum, then it's likely to be another false breakout and a whipsaw. We should get a pullback, which I suspect it will, because we're kind of stair-stepping down. I expect us to drop, break to a new low, pull back, and then go to this target of 2.12. So that'll give you some shorting opportunities intraday this week, or maybe even some short-term swings on a 60-minute or even a 4-hour. You can see right here we have had a retreat. We've got some overhead supply that we could use for shorting opportunities, and we may get some bounces along the way at these projections. So look for opportunities on the pullbacks to short, targeting these bouncing points. Looking at heating oil, we came all the way down to a weekly demand, but we have enough momentum to break it. We're just getting a small bounce before we do. On the daily chart, you know, we go way back to look at these demand zones back in 2021. You got April and November 2021. That's where we started these moves up. Both of these zones have been tested at a little bit. So basically, we are now coming down towards those demands. Okay, this is the current chart. I just wanted to show you where the demand zones came from. So I'm looking for more shorting opportunities. I don't know if we're going to make it up to 2.48 with the strength in the US dollar and the weakness here. It looks like we're just going to keep pushing down towards 2.11 and 1.88. Keep in mind the 211 area has been tested once. The 188 came close to it, but hasn't tested. So if we're going to get a meaningful bounce, we'll get a small bounce at 211, but then continue down towards the 188. It won't happen all this week. You know, I would look at us maybe coming down to that 211 by the end of the week. Looking at the 4-hour chart, this gives us a possible entry point. You can see we had a negative divergence, formed a nice little supply zone, 2.39 to 2.41. That's my first entry point for a short, if I can. If we get a pullback to that area, I'm not sure if we're going to hit this first and bounce, or if we're going to pull back and then drop. If we do, this will be my target number 1, 2.26. If not, if we break that or bounce there first before the entry at 2.39 for the short, I would target 2.1 and then 1.91. So that's what I got for you this week. If you got any questions, feedback, anything, hit me up at brandonwendell.cmt@gmail.com. You can also follow me on Twitter. I'll be putting out some updates throughout the week at TraderBdub. And of course, please hit the like button and subscribe. That way you can be notified when new videos come out. Actually, you need the notification for that. But I appreciate your support and look forward to helping you again week after week. Until next time, trade safe, trade well. Take care, everyone.